Hello, Warriors. I'm telling you, these markets will not let you take a holiday off. Remember what happened the day after Thanksgiving, right? This, okay. So I left you Tuesday saying I'd be looking to fade the Fed. I want to talk about what happened after the Fed. There were quite a few reversals. The first reversal that comes to mind is the S&Ps. So we turned up. But the point I want to make about it is, the S&P has actually made a new contract high on this CFD here, but gave up all the gains from after the Fed, right? So the S&Ps gave up all the gains. It was a good fade. The dollar reversed after the Fed, and it has almost recaptured most of the gains. So, I would prefer for the dollar just to rally and get it over by year end, but there is a potential for this correction since we did not make new highs on the Fed for the dollar to sell off one more time into the 95 range before it attempts its final thrust to 98, which I've been talking ad nauseum for the last several months during this dollar rally that I was looking for it to terminate up there around the 97.50 was the target from the formation breakout. If you don't remember it, I'll show it to you one more time. This was 89.5 to 93.5, which is 400 points. We had a breakout test. They tried to shake people out, but the test held. And 400 from here gives you 97.60. So 97.60. This range right here, if you just take this range right here, it gives you 97.90. That means if we break out above this double top, and there probably are some dollar bears. You think there's a buy stop above this candle? Above this candle? I'd say there's a few. Okay, so that's where top pickers are going to capitulate, but they may have their day, and we could get a pullback first. In fact, I think it's very interesting that with S&P's down 1.5% and NASDAQ down 1.5%, that there's no bid in the dollar, right? Where's the flight to quality with this happening with risk off in the equities? It's certainly not flowing into the dollar. In fact, Euro's having a good day. Euro's catching some flows after closing real weak on Friday. And it keeps alive the scenario for a rally back to 14.5 or so. Could do that this week. So, pull back in the DXY and a pop in the euro, maybe to, 14.30, 14.50 would not surprise me. And I don't believe that's going to be that it's going to leave this as a low for the move. I think it'll set up one more short in the euro down to 110.5. See where this weekly trend line is coming in now. 110.39 approximately. So, I do think that the dollar has not peaked yet. That's the main point, and that there could be one more jiggle in the dollar to the downside that could take euro towards the 114 level. Cables holding, putting in, I think, higher lows, about the same lows. Maybe cable could rally to 34, 35. So I'm open to either happening here. And if we go straight to 98 from here, 170 pips, I'm happy to start laying out short positions there. What really held up the best and did not give up the reversal gains, we had a nice reversal day in silver from down here. Okay, and it's giving up some of its gains. It's my contention going into New Year's that this low will be taken out, but we could rally to 23 or so first before that happens. But as you can see, it hasn't given back as much as the stock indexes have, and it hasn't given back as much as the dollar recaptured the reversal. So there is some relative strength building, which will give me more confidence at new lows. I'm still looking for 21 to be taken out and we'll be looking to accumulate in the mid 20 range all the way down to 19. Similar situation in gold. Still doesn't look like it's done to me. It could just be a little flag here, and maybe we have 1820, 1830. Still my belief this low will give up one more time. And I think what's going to press silver and gold to potential just lower lows, maybe gold goes 1730. Some people are talking 1720 is going to be the last surge in the dollar up towards that 98 level. But you have to admit that with as weak as we're looking at the S&Ps and NASDAQ right now, gold isn't doing much in the face of this risk off. And I think that you take a snapshot of today's screen where you have the dollar down, right? And the S&P's down, which normally the S&P's down like this would have caused some safe haven buying in gold. It's not. In the dollar, it's not. And the bond market. And, I'm looking at the 10-year almost at new lows, but they're not making new lows. Lows were here. So, we came off from the Fed. So this has also had pretty good follow through. Very counterintuitive with a double taper causing lower rates. So people are on, they're thinking recession or, major 20% sell off in the market at this time. I don't think that's going to be the case. In fact, I talked about last week looking for the market to be down into, well, let me wish you a happy winter, which the solstice is tomorrow. So I won't get too bared up in stock indexes here. This could turn out, and doesn't have to be today, some type of cycle low before we get another rally. So, I think a lot of this is being priced in. Maybe we get some better news on Omicron. You have to admit it's not exactly a bullish type of backdrop between tapering and COVID and a lot of people showing some weak economic numbers as well. Inflation, everything. It's kind of a toxic mix. But I'm not above thinking that we could put in some type of short squeeze. I think JP Morgan's talking about potential short squeeze setting up, and we still haven't taken out this low. NASDAQ, which I had identified as a weak sister, has taken out the low. So again, not seeing big flight to quality. No one's buying the dollar. When markets are really nervous, they buy the dollar, they buy gold. That's not happening. Yields aren't that much lower. So, a lot of the outside signals are saying, I don't know about pressing the short side down here. Something else too, in the next couple of days, if the VIX is going to put in a lower high, while we're taking out price lows in NASDAQ, which we've already done or on the verge of doing here, S&Ps were still, about 60 handles above it. The VIX could just be a failing rally here. Okay, so if that's the case, we have another rally coming in equities and risk. Just some of the NASDAQ stocks, I know that a lot of people are bullish Apple, and I was talking about Apple and it being an ABC type of correction. There are gaps here in Apple that could be filled. But when I look at this, to me, it looks more corrective. And, we had a lot of Mo at the top. So, I'm thinking we could be pretty close to some type of buy in Apple. Microsoft looks a bit weaker, but we're at support right here. This could be an ABC. We could follow through, but this isn't the place I, would start new shorts in Microsoft. On a failing rally that we had, yes. Or at a divergent high, yes, but not here. Netflix, starting to wedge up here. I just can't find things. When I was bearish, a lot of this stuff up here, um, I'm tempted to buy this stuff. Amazon's under pressure, but really holding a support zone right here. Tesla has been under pressure, but it's kind of a grinding decline. It's not collapsing. So anyway, I think you catch the gist. Here's Facebook, maybe just a pullback after this great recovery, after people labeled it a tainted stock. It actually is one of the strongest fangs out there. Okay, so we're getting some follow through in the, what's interesting is gold down a little, but look, GDX down a lot. So I think there's going to be a better entry for gold shares too. I'm not saying they can't rally again if gold goes 1830. But so far what I see is this: a 1, a 2, I'd be expecting a 3. I was looking for about the 26 level or so. So we'll see what happens here. If we could get one more low in GDX. Here's Yamana. This is a real classic looking one. Could either turn into a head and shoulders formation here. Anyway, the gist is one more low in the gold and silver, and also looking to buy the miners on that. Okay, if you've been fortunate, you've been long. If we get one more pop up here with the dollar weakening, if it corrects, gold should pop. I'd be taking something. I'd be booking it. Mike was scalping the short side of Newmont on Friday up here. Nice. So, I still think you could be doing it. Maybe this was a blow off top, but I actually think that if we get back under 56, we're going to see Newmont in the 40s. But a tremendous move. You can't chase that either. And here's your the silver play. And I'm going to be focused on silver next year because that's the color of my hair. I'm just kidding. Because I believe next year the gold silver ratio will begin to contract from this 80 level it's currently in, but looking for one more drive in SILJ. I'd like to see it around the 61.8 level of this big advance we had in 2020, and it comes in 61.8 around 10. So looking for this speed line to be tested for a buy. AG is another candidate in the silvers. So I'm going to be looking at miners. Right around the dollar peak is, just best guess is when I'm going to be able to do, when all the chips and all the pieces of the crossword puzzle begin to fall in place. So just something to remember. I don't think the dollar is going to benefit from a bear market in stocks, and this may just be a preview of, us losing our safe haven status when things are under pressure. And you got to say, things are under pressure. Relentless here. But I just, if you're not short, and if you are, I'd be booking something. NASDAQ could have another leg down. If you have something like a quality from here, this was 1200 from here to here. So 1200 from here would take you down to 15.2. All right. And some very big levels on the daily that, we've cracked some moving averages. We've cracked the 50-day. S&Ps have cracked the 50-day, and the 200 for both of them, if this turns into a rout, is 43.50 on the S&Ps, and all the way down to about 14.8 in the NASDAQ. I'm not looking for that to happen at this point. I'll be aggravated if it does without me. So anyway, that's trading. Something else that's happening here again, very critical area up here. at this 1380 level. I brought up this 1380 level so you could use it as a pivot. It looked like a breakout, and then it negated the breakout at 103.75.80. It's rallied back to it. Yen looks heavy to me, and probably means more risk off and maybe another wave up in the bonds. Let me look at TLT. It's really not doing much. For what's happening in the market, you have TLT about unchanged. So you guys tell me where the haven is. I think it's cash. And for Americans, as they start building cash, it would make sense for them to tune in for our views on the dollar and what alternative currencies you should be positioned in case this dollar rally terminates next year up at the 98 or so level up here, and that this was just a big bear market rally, and we're going to have something like this in 2022. You're not going to want to be long dollars. You're going to want to be in different fiats, most likely precious metals as well, and probably stocks. So this is my look ahead. Cash is king. Cash could be king, but Rich, I'm not sure what the cash will be. If the dollar peaks up here, it may be the Aussie. Maybe the Aussie, if you're in the US, would be a better currency to hold. Maybe even euro. So, when you look at the euro long term, we're still in retracement territory off of what happened from 2020. So, I mean, do you think the euro's, are we going to start hearing from the parity people in the euro? This could just be a consolidation of a few years, and it wouldn't take much to turn the trend back up and, try 130. So yes, cash is dry powder. It's you definitely need it. Something else, and I'm going to wrap it with this. I won't get too bared up, and you guys know I'm not afraid to short oil. Was talking about it at the highs, but what's happening right now on the oil, I would say to be careful about thinking that we're just going to take out this low right away. That it's very possible that even though oil could be in a new bear market and the cycle is over, that in the next day or so that it digs in its heels before we take out this low, and you have something like this from here to get oil back towards maybe 75, 76. And I'm bringing in one of the best oil analysts I know, Tracy Schuchart at Shy Girl, will be our guest on Thursday to talk about the energy markets. I know I wouldn't feel secure in Europe with what's happening with natural gas pipelines and temperatures falling and Putin holding the lever. But I'll be here with Mike tomorrow, and we could talk about this recent sell-off and what he's seeing and what he thinks might be bargains to buy, or whether he's going to be using strength to sell short. So I'll see everyone tomorrow with Michael Venezia, and Mike will be on here to give you his Monday take in an hour and 13 minutes. Remember, don't just count your pips, count your blessings. And now the euro's firmer. So looks like we're going to have this pop in euro pullback in the dollar index, and be careful about being too bearish in equities here. Okay, the solstice is tomorrow. Okay, you're welcome, Brooke. All right, everyone. As Mike Venezia says, trade well. We're rooting for everyone that hears our voices, because here at TradeGate Hub, our mission is to build up and edify traders every day. That's our mission. So see everybody. Thank you for your attention. Hit the like button if I'm adding value to what you're trying to accomplish in the markets. And Mike and I will be with you tomorrow.